To Wall Street now as investors digest what the latest developments in the Middle East mean for the global economy. The Dow climbed and oil prices dropped, as well as street measures the impact of Iran's retaliatory strike on a U.S. airbase in Qatar. So a top concern for investors at this moment, whether Iran will close the Strait of Hormuz, a critical oil trade route. So the Strait of Hormuz connects the Persian Gulf and the Arabian Sea. It's bordered by Iran to its north and the UAE and Oman to its south. And according to a report from the U.S. Energy Information Administration, or EIA, large tankers carry around 20 million barrels of oil through the passage every day. That amounts to roughly 20 to 30% of the world's oil supply passing through the Strait of Hormuz. A closure would spike global oil prices. Now, Iran's parliament already approved blocking the passage, but the final decision lies in the hands of Iran's regime security officials. So let's bring in CBS News MoneyWatch correspondent Kelly O'Grady to break it all down. Kelly, where do oil prices stand now, and how high could they go if Iran closes the Strait of Hormuz?
So if we were looking at oil prices overnight, that was sort of the first time that they started trading since the U.S. got involved in the conflict over the weekend. They spiked above 80. But after seeing Iran's retaliatory response today, oil investors backed off. We've actually seen oil prices drop nearly 9% since yesterday. And so what that tells you is that analysts and investors, they are betting that Iran is not going to do exactly what you just mentioned, closing the Strait of Hormuz. There's not a non-zero chance by any means, and things could change very quickly. But most analysts that I'm talking to are putting this at a very, very, very low chance. Because if you think about it, what is Iran's main source of revenue to finance all of these attacks and activities? It is that oil revenue. And so it will be very difficult to bite off the hand that feeds you, to use that expression. Now, if we were to see them close the Strait of Hormuz, because like I said, it's not a non-zero chance, you would see oil prices spike above $100 a barrel. That puts us back in the territory of summer 2022, when we saw Russia invade Ukraine, and a few months after, we saw oil prices get above 115 in that area. And that's what caused gas prices to go above $5 a gallon. That being said, where we stand today, it looks like investors are betting that the conflict is not going to escalate further, and that's why you're seeing that downward pressure on oil prices.
So President Trump posted to social media warning everyone to keep oil prices down or risk, quote, playing right into the hands of the enemy. That was the quote. So who actually controls oil prices? Is the worst case scenario likely?
So oil prices, oil is traded on the global market. So this is really simple economics. It is supply and demand. No one oil producer can say, I'm going to sell it to you for $80 and I'm going to sell it to you for $20. This is traded on the global market. That being said, a lot of these countries like Saudi Arabia, the countries that are a part of what we call OPEC plus, they set the amount of supply that they produce. So when they decide to pull back on supply and cut their production, oil prices will go up if demand stays the same. But if they decide to increase supply, which is sort of what the president seems to be hinting at there, that would keep prices low, even if Iran were to block the Strait of Hormuz. I'll also note that Saudi Arabia, if they wanted to, might be able to divert some of these ships. They have access to different passageways in the Red Sea. It's not as direct as the Strait of Hormuz, but they could also help in that scenario, that sort of worst case scenario. Like I said, worst case scenario, not many people are expecting that to be likely, but not a non-zero chance.
And Kelly, I can't imagine how many times you get asked this question, but how are investors reacting to all of this?
So immediately when I saw everything go down on Saturday night, Jules, I started texting investors because I said, oh gosh, what is going to happen to the markets on Monday? And by and large, most of them said to me, taking away Iran's nuclear capability or potential to get nuclear capability might actually be seen as a stabilizing force in the region. And that's really what we've seen throughout the markets. It wasn't too much on the upside, too much on the downside. And then when we did see Iran's retaliatory measures this afternoon, you did see a bit of a spike in the market. Certainly by no means, sort of a victory lap or shouts of joy from Wall Street, but tepid optimism that this is not going to escalate further. We will see. Investors can be wrong, but at least that's the feeling right now, Jules.
You get overtime over the weekend, even when the market's closed. You're always on. Kelly, thank you so much. Great information. Appreciate it.